Good morning, fellow summiteers. This is a very exciting conversation we're about to embark on this morning. It is my pleasure to introduce a very dear friend and co-conspirator on all things systemic inclusion, Dr. Will Arvelo. And Will, I'm very grateful for your kindly joining us today and for kindly introducing Barry Whitus, who's going to share some extraordinary insights from a national leadership perspective on the Community Reinvestment Act ecosystem and how and insights regarding our shared vision, Will, for systemic inclusion. One of the things I want to share about Will with our colleagues is that it's a great joy and privilege to work with Will. Will brings, he is Director of Economic Development for the state of New Hampshire and brings extraordinary passion and expertise and experience to this work. Most recently, he comes from having been president at Great Bay Community College. So he brings leadership not only in economic inclusion, but in educational equity as well. And Will, thank you so much for introducing Barry for us, and also for co-chairing together the New Hampshire Council on Systemic Inclusion. Thank you very much. Will?
Thank you, Bob. And Barry, you don't know this probably, but I can tell you that every time Bob and I have a conversation, he and you come up and OCC comes up, you know, he's like a little kid in the candy store, and just highly appreciative of the conversations that he and you have had over some time, and just really, and he expresses it best as it's just the importance of having you in this conversation. So just to give folks a little bit of an introduction about your background, Barry Whitus is the Office of the Comptroller of the Currencies, known as OCC, Deputy Comptroller of Community Affairs, where he leads a Department of Community Development Professionals located in Washington, DC, and the OCC districts. The Community Affairs staff is responsible for outreach to banks and their community partners, the development of policy, and the creation and distribution of educational materials on community development issues. Prior to joining the OCC in 1999, Barry was Director of Affordable Housing Sales at Freddie Mac, where he led a nationwide sales team responsible for developing products and strategies to achieve the company's congressionally mandated affordable housing goals. Barry previously served as Deputy Director of the Resolution Trust Corporation's Affordable Housing Program, and he began his career in Washington, D.C. as a presidential management intern and budget examiner at the Office of Management and Budget. Barry is a certified public accountant and holds a Bachelor of Science in Accounting and an MBA from Indiana University. Barry, it's a real pleasure, one, to meet you, to have you here with us this morning to talk about this important topic around CRA and systemic inclusion. And take it away.
Well, great. Thanks very much, Will and Bob, and thanks for having me back to speak to your to your conference again. You guys are doing great work in New Hampshire, and really it's a model for other states to follow in terms of bringing together all the key actors to facilitate financial inclusion for your communities. This morning, I'd like to update you on two important initiatives that the OCC's acting controller, Brian Brooks, has made top priorities for our agency. As you mentioned, the first is our new Community Reinvestment Act, or CRA rule, which took effect October 1st. And the other is Project REACH, which the OCC launched in July to tackle systemic barriers and prevent millions of low and moderate income individuals from participating fully in our nation's wealth-generating economy. So we're very much aligned with what you're trying to achieve here in New Hampshire, and are really 100% committed to facilitating financial inclusion and providing incentives for our banks to do so as well. So we believe that the Project REACH and the CRA initiatives will most definitely help expand economic inclusion and fair access to financial services for millions of low and moderate income individuals and areas. We also believe they'll help you and the National Collaborative for Digital Equity and the New Hampshire Coalition to create win-win partnerships with banks that can expand financial literacy and economic and digital inclusion in New Hampshire and nationwide. Now more than ever, we need to work together to expand economic inclusion and fair access. When you just think back to your last summit, we discussed the importance of internet and digital connections to our schools, workplaces, and homes, and the need to enhance access in underserved communities. None of us could have predicted how critically important that connecting digitally would become in 2020. The global pandemic has profoundly impacted the way our children are taught, how and where we work, and how we connect with family members near and far. The pandemic shined a harsh spotlight on existing fault lines and the deep divide between the haves and the have-nots. Since the onset of the pandemic in March, the haves learned and worked remotely and managed their financial lives online. They worked remotely because their jobs could be done online and they had access to high-speed internet and computers. Others couldn't work or learn remotely because they don't have reliable internet, computers, or jobs that can be done online. The pandemic exacerbated existing inequities. These inequities concern parents, educators, and employers, including the 1,100 national banks and federal savings associations the Office of the Comptroller of the Currency supervises. So how is the OCC helping? Well, first, for those unfamiliar with the OCC, I'll provide a little bit of background. The OCC charters, regulates, and supervises all national banks and federal savings associations and federal branches and agencies of foreign banks. And I underscored the word national banks and federal associations because there are also state chartered banks which we don't supervise and which OCC's rules do not apply. So I just wanted to level set on that point before continuing. So what we do is ensure that the national banks and federal savings associations we supervise operate in a safe and sound manner, provide fair access to financial services, treat customers fairly, and comply with applicable laws and regulations. We fulfill our mission in part by conducting periodic examinations that assess a bank's safety and soundness. We also conduct CRA examinations of the loans, investments, and services banks engage in throughout their service areas to ensure that these institutions are serving all of their customers, including low and moderate income areas. These are the communities that Congress, when it enacted the Community Reinvestment Act in 1977, wanted to ensure receive fair access to financial services. That's why after each Community Reinvestment Act examination that we perform, we provide the public and the bank a CRA grade for reference that's made available for review by bank customers and community stakeholders. The bank's Community Reinvestment Act rating, which ranges from outstanding at the very top to substantial noncompliance in the worst case scenario, is posted publicly on OCC's website at occ.gov. A low bank Community Reinvestment Act rating creates challenges for those institutions when they're applying to the OCC to open a new branch or to merge or acquire another bank. Banks also want to avoid the public attention that a low Community Reinvestment Act rating can bring. Over the last 43 years, the Community Reinvestment Act has provided a powerful tool for community revitalization. The Community Reinvestment Act has helped create vibrant, livable communities and encourage trillions of dollars in bank lending, investment, and services in low and moderate income communities. However, not all communities have benefited equally from Community Reinvestment Act dollars. Rural areas and Indian country in particular have received less CRA benefit than other areas. Our new Community Reinvestment Act rule is designed to change this by creating greater inclusion and financial access and driving more CRA loans and investments into underserved communities. Our rule does this by making Community Reinvestment Act evaluations for national banks and federal savings associations more objective, transparent, and providing all stakeholders greater clarity on what qualifies for positive Community Reinvestment Act consideration. Our rule modernizes a CRA framework that was largely unchanged since 1995, despite dramatic changes in technology and consumer behavior. Our new rule acknowledges that most customers now access their banks online. Mobile banking increased steadily through 2019, and it more than doubled over 2017 as the primary way customers access their banks and outpaced all other account access methods, including tellers and automated teller machines. Our new CRA acknowledges this reality of online banking and greater reliance on non-branch methods for interacting with their institutions by expanding where banks, particularly the large ones that serve customers online nationwide, are expected to make CRA investments. Under the old rule, OCC examiners focused their Community Reinvestment Act exams on the loans, investments, and other services a bank made in low and moderate income areas where the bank had its main office, branches, and deposit-taking ATMs. The new rule establishes additional assessment areas for virtual banks that take more than 50% of their deposits outside of a branch network. And this is very important because we have many online banks that are operating in states that are very friendly to this type of activity, a number of them in Utah, for example. And they didn't have any branches, they just had a main office in Utah. And so that would mean that while they're taking deposits from all over the country, but their main office is in Utah where they run their operations for their virtual bank, it just means that Utah will be the place where where that bank is examined for CRA, and not those places all over the country where they're taking deposits from. So this change to evaluate banks that take more than 50% of the deposits outside of the branch network really ensures that the CRA activities are evaluated where the essence of the transaction is occurring, which is where the account holder actually lives. So I want to point out something else that would be very much of interest to you attending today's summit, and that's how our new rule takes the mystery out of what qualifies a bank for CRA credit. Will mentioned that I have had many conversations with Bob over the years about how CRA interacts with digital inclusion. And unfortunately, many of them were long conversations because the old CRA rule was not as accommodating of the opportunities to involve banks in digital technology and inclusion because the old CRA rule was not framed around a world where a significant share of activities occurring online. So for a bank that wants to increase its inclusion by expanding initiatives through digital inclusion, which ultimately helps the bank serve its customers who are going to be interfacing with the bank through digital means, seems only likely and needed for CRA. So those conversations with Bob were very important in helping us shape a new rule that is much more friendly to and incentivizing of banks involving themselves in this type of activity. So one of the things the rule does to provide that greater clarity of what counts is for CRA credit is to provide a list, an online list on our website of examples of investments, services, and activities that a bank may receive CRA credit for. And we also created a CRA activity confirmation process where inquiries can be submitted directly to the OCC and examiners about whether activities specifically, not specifically mentioned in this list or in our rule qualify for CRA consideration. So while in the past, Bob would have to pick up the phone and talk to me and describe a particular digital initiative or an initiative around financial inclusion. And, you know, we'd have to spend a lot of time going back and forth and parsing through the rules. Now we have, you know, a very comprehensive list of almost 200 activities that are listed, and in addition to having a rule that's much more specific about what counts and is much more accommodating of things that speak very specifically to educational inclusion, digital inclusion, and financial inclusion. So anyway, I encourage you to review and use our list to create win-win partnerships with the banks that you seek support in your efforts to expand digital and economic inclusion and financial literacy. Our CRA list of qualified activities contains examples of bank support for digital inclusion, such as grants to nonprofit community programs assisting low and moderate income individuals to enroll in free or low-cost home broadband services. Another example would be support for nonprofit programs that refurbish used computers for low and moderate income individuals at no cost or very low cost, as well as bank funding for nonprofit community programs providing digital literacy training to low and moderate income residents to increase their ability to use online banking services. So these are the kinds of activities that we've been hearing from your partners about, that we've been hearing from you and many similar organizations around the country that they view as critical, and I certainly view as critical, as does the OCC, in helping to promote the kind of an economic inclusion that we're looking to achieve through the systemic efforts that you're pursuing. Our rule and the qualified activities list, however, also includes examples of bank support for something else that's very near and dear to your hearts, and that's bank support for primary and secondary educational initiatives. Excuse me one second. The support also can cover both job and workforce support programs that primarily serve low and moderate income families. So just to repeat that, we've included in our rule specific identification and bank support for primary and secondary educational initiatives, as well as job and workforce support programs that serve low and moderate income families for CRA consideration. That's huge. It's something that people have been asking for quite some time for us to consider, and it's now included in our final rule. So how can you use the examples on our list to create win-win partnerships with banks? Well, first, the new CRA rule may help you more easily identify activities in your communities which, in partnership with banks, can help you address the needs of low and moderate income individuals in communities. And secondly, having a list of CRA qualified activities may help you refine your ask as you approach potential bank partners, because knowing that it's on the list and you having the specifics of that list and what counts will provide that bank greater assurance that they'll receive community reinvestment consideration for those activities. So between you having the list and understanding what counts, and the bank's understanding that those activities will count, we think goes a long way towards addressing some of the challenges that we experienced in the past with CRA. Now I'd like to move on to Project REACH and how this initiative is working to expand economic inclusion and financial access. Project REACH stands for the Roundtable for Economic Access and Change. And since July, it has had leaders in banking, industry, technology, and civil rights working together to identify solutions to systemic barriers restricting access to credit and capital. The idea for Project Reach came to Acting Controller Brooks in the spring as he watched, as we all did, the civil protests rolling communities from coast to coast. He decided to create Project Reach and ask its members to identify any systemic barriers that may have contributed to the racial unrest and prevented millions of minorities and poor from participating fully and fairly in the nation's economy. Project Reach is working to solve a number of systemic barriers, but I'll discuss the two barriers that keep the underserved, including minorities, from qualifying for small business loans and home loans. The first involves the 50 million people who are credit invisible because they don't have credit scores. They don't have credit scores because they don't make credit card or mortgage purchases, which our current credit rating system tracks to determine who is not and who is a good credit risk. So in essence, you need to have credit to get more credit. And so relying so heavily on your credit history has been somewhat limiting, particularly for people that operate on the edges or outside of the financial mainstream. So the millions of people who are credit invisible, however, could be good loan risks if a credit rating system tracked their online payments of rent, utilities, cell phones, and other monthly bills. And we expect Project Reach to very soon announce a new alternative credit rating tool that tracks rent and other monthly payments. And it may help qualify millions of the credit invisibles for home mortgages and small business loans at a more affordable price. Project Reach is also tackling an intractable problem that bars millions from buying a starter home and keeps minority families from building wealth through rising home equity. To qualify for a mortgage, a buyer typically is required to put down 3 to 5% or more of the purchase price, as well as cover steep closing costs. This is tough to ask for many low and moderate income minority or other families who are least likely to have inherited wealth from parents or grandparents. Project Reach's Homeownership Task Force is looking at ways to reduce borrower down payments and expensive private mortgage insurance for low and moderate income buyers. I lead the OCC's Project Reach Homeownership Task Force and have very high hopes that we can identify and announce solutions very, very soon. So in closing, I'd like to encourage your efforts to form win-win partnerships with banks and other community stakeholders. The partnership that you'll form will expand on the OCC's important legacy in underserved and low and moderate income communities. Your work will help ensure that the Community Reinvestment Act continues to revitalize communities for future generations. Thanks again for asking me to be part of this important discussion, and I look forward to your questions and hearing about your inclusion partnerships here in New Hampshire. Bob, back to you, or Will?
Yes, thank you so much, Barry, for these very, really exciting developments, the news that you're sharing about the modernized CRA. Folks, in the session, please note in the chat that I put links to several of the key resources that Barry, you've mentioned. So for example, the list of qualifying activities, information about Project Reach, as well as about Project Reach's various work committees. There's some really exciting information there. While folks are framing questions and comments to share with Barry, please let me know in the chat, and we'll introduce you and your question. And in the meantime, Barry, just to get the conversation going, what would you say would be some of the biggest? Well, you've mentioned a couple of the big changes in terms of the modernized CRA that the OCC policy has manifested around much more clarity in advance about eligible activities. It's a very exciting development, and more flexibility around assessment areas, particularly for banks that are doing banking online. And I know, for example, in talking with banks, as you say, that operate, let's say, only in Nevada or Utah, that historically their assessment areas for CRA compliance have been only in those states, even though they serve customers all around the country. Are there any other major developments in CRA policy you'd like folks to most know about?
Well, obviously you can't cover everything in 20 minutes, but I would say the other thing that is important to know is that previously the Community Reinvestment Act evaluation process was highly subjective, and which created a lot of inconsistencies, from bank to bank and from year to year. And really one of the key goals of this rule is to introduce a more quantitative evaluation process. So one of the major objectives now is to come up with thresholds that we could then apply, to the bank's assets, and say, if you do this much community reinvestment activity as a percentage of, let's say, the assets on your balance sheet, then you'll get a rating of satisfactory. If you do this percentage, then you'll get a rating of outstanding. In the past, as I said, that was judgmental, but we're moving towards a system where that would be more quantitatively driven. So that's probably the other key change that I didn't really go into, but is definitely something I think will help probably banks, better understand, and establish their CRA goals going forward.
While we're waiting for our colleagues to conceptualize some exciting questions to explore with you, another one that I'm hoping you could comment upon, because I know that in sidebar conversations you and I have had recently about a consortium of banking leaders in Manchester, New Hampshire, you expressed some great interest in that and support, moral support for that. So as you know, Barry, we're working with a consortium of more than a dozen banking leaders with operations in Manchester, New Hampshire, who have come together with Manchester Proud and with a school district and post-secondary institutional leaders and foundation leaders to really look at how can we together make joint investments in systemic inclusion to help lift LMI kids and their families out of intergenerational poverty. In that context, one of the low-hanging fruit that the group has taken on as an early effort to build some momentum and relatively rapid impact is on building inclusive pathways for LMI kids and youth into banking careers. And I know that you had some really valuable insights about the whole notion of CRA and strengthening the inclusiveness of the banking workforce itself.
Well, it's certainly an issue that has come to the fore very much in recent discussions about racial and financial inclusion. As part of Project REACH, we have an amazing group of bankers and civil rights leaders who are working collaboratively to try to identify what are some of the systemic barriers to greater financial inclusion by particularly minorities and African Americans. We have heard that having bankers working in the community that look like members of the community, that they can relate to culturally and sometimes linguistically, are key and smart from a business standpoint in terms of having diversity in management ranks. Again, I think there's a lot of research around the fact that having a number of different points of view results in better decisions being made. And in particular, if there's discussions about entering new markets and having people on the management team considering those, making those decisions or considering those options, will result in different points of view that most likely will help the bank inform a better decision as to how to pursue those. So those are just a couple thoughts that come to mind in terms of the benefits of a more diversified workforce. And I think I'm hearing very much from the banking industry receptivity to those types of changes in the conversations that we're having as part of Project Reach.
Super, Barry. Thank you. I'm seeing a question in the chat here from Ken Wells. Ken, do you want to unmute and share your question with us all?
Sure, thanks, Bob. I'm particularly interested in a couple of initiatives. One being rural broadband and remote learning for a lot of New Hampshire kids who are in sort of the free and reduced lunch situation in my district in rural New Hampshire. And secondly, I'm interested in apprenticeship programs in, say, Franklin, which would involve career training and for high school and community college apprenticeships. And I'm wondering, can you draw a picture for me how CRA involvement would help maybe promote those initiatives?
Sure. So under our Community Reinvestment Act rule, we have banks receiving CRA credit for making loans, making investments, which can include grants, as well as supporting service activities, community service activities. So the kinds of things that you were just talking about, apprenticeship programs, we'll start with that one. I'll move on to rural broadband. The apprenticeship programs, if they're serving students in schools that are LMI or schools that are high percentage free and reduced lunch, you've established the fact that you're serving an LMI population. And then we've, under our new rule, more broadly qualified educational activities, which will include apprenticeship programs that can prepare individuals for the workforce. And in the past, our rule wasn't very clear about when a bank could get credit for those types of activities, particularly if the bank employees were involved in terms of a mentoring program, in terms of serving on the board of an organization that was focused on apprenticeship programs to help get individuals, and particularly LMI individuals, into the workplace. So we think that there's a new opportunity there that banks have not been aware of. We're hoping that we get credit for, but we didn't include in our rule, but are now there now. So we want to make banks aware of that opportunity. In terms of rural broadband is specifically called out in our new rule as a qualified activity. In the past, it was sort of referenced in passing, and there was a number of questions as to when it would not count. Here we've said in our new rule that rural broadband is an essential service, and that establishes it as in another area, establishes as qualified under essential infrastructure, and now a bank could get 100% credit of all the dollars lent or invested if more than 50% of the recipients of that service are LMI. The new rule also says that if just a fraction, maybe 20 or 30% of those individuals are LMI, then the bank can get credit at the pro rata share of the investment that's serving LMI. So that's a new twist to our rule as well. And so I think that will clarify that you'll get CRA credit for making an investment or a loan that supports rural broadband, but if it serves less than 50% low and moderate income individuals, you'll still get credit, but you'll get credit at some prorated amount, whereas in the past, if it was less than 50%, you got nothing. So hopefully that answers your question about those two areas. And if it's not, please let me know and I'll try to respond.
Thank you.
So I do see a question in the chat box from Will. He's asking how technology is impacting banking workforce. For example, would we encourage youth to think about frontline tellers as a step into banking careers? If not, where would a young person start? Well, I would certainly think that, you know, many people, I know that many people who have worked their way up into the ranks in the banking system have started off as tellers. I don't think it's any great surprise that in the future there'll be fewer tellers since more and more people are banking online. And as time has gone on, and particularly through the pandemic, you know, we've seen foot traffic in the bank branches just, you know, dwindle significantly. You know, obviously it varies from place to place, but you know, like so many other areas of our economy, you know, people are by necessity, you know, making the dive into technology where they might have avoided it in the past for various reasons. So where would a young person start to get their toehold into the banking system if the teller choice is becoming less and less of an option? You know, I'm going to take a guess that bank apprenticeship programs that might involve working their way into being tech support people, customer support people at call centers is going to be more of an option for getting a foothold in the banking sector going forward. Perhaps, you know, people that are, you know, that have good computer skills might be able to get their foothold through an IT function at a bank, you know, an apprenticeship program that gets the individual very specific and applicable skills in that space could be an option. You know, I think there's a greater receptivity to the idea of really reaching out more proactively and having people of color getting into tracks to become loan officers. As I mentioned a moment ago, I think that you'll be seeing a greater focus on that within the banking sector as our country becomes more and more diverse, and as particularly individuals that have you know, dual language capabilities will be in higher demand, both as loan officers as well as customer support. So I think those are a few areas where there are opportunities for a young person to distinguish themselves and get their toehold into the banking business.
And Barry, per Will's question, there's been a beginning conversation, Will, with the New Hampshire Bankers Association. Christy Merrill and Ryan Hale and Sue McKee have a young bankers program, which has been looking at some of these very questions, Barry, that you've been talking about in terms of what are some other pathways. And it sounds from what I gather that there's an emerging consensus that there are many ways in today's banking, sort of what might pathways that might not have existed 5 or 10 years ago, like you say, around tech support, online banking, software development, cybersecurity, a whole variety of really exciting career paths are opening up because of the tech developments, Barry, that you've highlighted. What on a tangent, Barry, would it be accurate to say that on the technical assistance side, that the community affairs side of OCC, that if an effort like the efforts that a number of us are making together in New Hampshire to spur partnerships around economic inclusive pathways into banking and teaching and other fields to make them more inclusive as an economic inclusion strategy. Would it be right to think that you and your colleagues might be able to provide on the community affairs side, to provide some technical assistance for us on helping us design formative impact evaluation systems to track impact both in the near term and longer term, to capture some of the insights that you've been saying about not only by diversifying the banking workforce, that's an immediate economic inclusion impact, but as you're saying, there may well be some important second waves of benefit from that over time. Does that make sense?
I mean, I think the question of being able to have data on the impact is important. I don't have a huge staff. I am joined here today at our conference by Bonita Irving, who's our community affairs officer. She serves several states in the New England region, but she also serves, 100 or more banks as part of her portfolio, in addition to supporting, initiatives such as yours. She's happy to listen, but I'm not sure that we can do much more than, provide advice about, the CRA. Does this count? Does this not count? She's, able to share publications that we produce that speak to some of the issues that we've talked about on digital and financial inclusion. And certainly she can put people in touch with our team in Washington, if there are particular policy issues that have come up or specific questions, does this count or does that count? But I do think it is important for mechanisms to be developed to be able to track the progress and the success, because that will incentivize other banks to become involved if they see initiatives like yours in New Hampshire, really beginning to move the needle. I think we can only help so much, given that we're rather limited in terms of our staff.
Well, and that's very helpful, Barry. And as you know, and as Bonita knows, Bonita and your colleagues in regional offices have offered exceptional workshops for non-bankers on how to understand the CRA ecosystem. And you provide a lot of capacity building already in LMI communities to help nonprofits and others really understand this ecosystem as you're doing today. This is tremendously helpful. And just want to pause here to see if there's some other questions. One more question about Project Reach, Barry. Is that national leadership conversation in Project Reach something that might be fruitful for us to explore in New Hampshire and in other states, intersecting with and reaching out to folks that are involved in that, in seeing how on the ground in LMI communities we might partner to align local efforts with what they're envisioning nationally? Does that make sense?
Yeah, I mean, eventually, I think it will involve sort of branching out through the banking system across the country and, pushing some of these new innovations, particularly around the alternative credit utility. Once it gets developed, bankers in particular, need to understand, is this predictive? Can I count on this to accurately predict future defaults the way, the FICO score does today? So that, there will be definitely a need for that concept to work its way, into the banking system, and initiatives like yours in New Hampshire may be just the vehicle to bring that to the banks and to bring it to their attention. And if they're not aware of it or have some concerns, that you can begin this conversations. As part of my group that I lead pertaining to home ownership, we're looking at models that would involve, ways of eliminating mortgage insurance for high loan to value ratio mortgage loans. And again, eliminating mortgage insurance just means that somebody else is taking that risk. And so again, it's looking at what is the model, how is the risk being distributed, and making other banks, once a sort of prototype has become established, and then getting other banks to understand that model and to see, how it makes sense to, or if it makes sense to to incorporate that in some way or do a pilot on it. And then we also have another initiative that I didn't even mention around small business finance and looking at new mechanisms to support, in particular, minority small businesses. And so, a lot of that conversation has focused on sort of bringing back into the bank a portion of the very small business loan market that has more or less been ceded to business credit card issuers over the years. But again, that also is dependent on a non-traditional credit score. If you're going to get a minority business owner that does not have a credit score, or a potential business owner that doesn't have a credit score, credit through a bank, is there the possibility that a bank would be willing to adopt this credit scoring utility, as part of their small business program offerings, or offer small business loans that are more suited to minority borrowers. So I guess sort of short answer, to sum it all up, I think there will be initiatives that will be developed, and then we will eventually be looking to initiatives like yours to bring this to the attention of banks in your communities, and see if this is something that would work for them. And that would be another venue for Bonita to be involved with your effort. But I think we're still a ways off from that.
Yeah, this is really helpful, Barry, and this is enormously exciting. The innovations that you're describing, I'm just taking copious notes on that. They're major. I mean, just what you just a moment ago around small business finance and micro lending, I guess, is how I'm sort of translating that into my own, into my own mind. It's these loans for really small businesses that need that leg up to establish that credit rating to get started. Do you see CDFIs? That's something we've not really talked about yet. Community development finance institutions as important critters in the CRA ecosystem that folks might want to know about a little more about?
Well, CDFIs are an essential partner to many banks already. I do think that as we expand some of these initiatives I've been talking about to reach minority businesses or would-be minority business owners, the CDFIs can certainly play a role in terms of providing technical assistance to that owner or potential owner or creator of a small business. And I think that to the extent that a bank, might be willing to partner in some way with a CDFI that might use the new credit utility to originate a loan, and maybe the bank would buy the loan from the CDFI or provide some type of a financial support to the CDFI for providing the technical assistance for a loan that the bank ultimately makes. Yeah, those are the kinds of partnerships that I think could blossom under the Project Reach Small Business Initiative.
This is really helpful, Barry.
Barry, it's Will. I'm particularly interested in that program from a state perspective. And Bob, if there's any way to, as this program develops, for us to just be kept in the loop and make sure that as we develop, Barry, so on the state level, we're really working hard to build this ecosystem of, and understand the ecosystem really at the same time, of minority owned businesses in New Hampshire. And so we're just beginning to kind of understand what that looks like. But one of the things we're interested in is really making sure that we bring to the table the resources at the local, state, and federal level that might be available to these fledgling businesses in many cases. We're very interested in kind of the entrepreneurial startup incubation ecosystem as well. So anything that you can offer as it relates to that, and this particular program that you're talking about would be really helpful in all of the work we're trying to do here at the state.
Mhm. Yeah, well, I think you'll hear more about the credit utility, and Bonita is certainly a source of information as it rolls out. So the other thing that's been brought to our attention is something called a special purpose credit program, and whether that can be a tool that banks can use to target their efforts, in particular, towards minority small businesses. And a special purpose credit program, allows a bank under certain guidelines and with certain regulatory pre-approvals to say, I'm going to offer this particular product with a lower FICO or a lower credit utility cutoff if it's to a minority-owned business, or if it's to a business that's located in a heavily minority area. Those would be the kinds of initiatives that could also be undertaken as part of some of the Project Reach efforts. So we're having more and more conversations around that because of the very significant impact that the pandemic has had on minority businesses and small businesses in particular. So those are a couple of ways that I think we could plug in with your efforts in New Hampshire. Will.
Hey Barry, it's Jason Keller from the Federal Reserve. Good to see you.
Likewise, how are you?
Good. Just jumping in on the special purpose credit program. That is something that we're hearing a lot about as well. Just to offer that support, but I really encourage anyone to work with their bank directly and reach out for that bank to reach out to their primary regulator, because it can be complicated. But the idea is that you're really trying to target an unmet market need, and special purpose credit programs have to be for a certain period of time with certain set parameters. So yes, they can absolutely be engaged in something like this and something that should be explored, but this is something that takes time and often seeks regulatory approval beforehand. So I just offer that up as a additional comment to Barry's interest.
Yeah.
One of the
Yeah, Bob.
Well, yeah. So one of the things that I wanted to share, Barry, is my deep gratitude for the changes that you and colleagues at the OCC have been making in CRA. I think that, speaking personally, I think that the list of approved activities is an incredibly significant development tactically, because it, as you know better than I, Barry, it increases the predictability for bankers who can make CRA investment decisions more confidently now with that. And that's no small thing, because that allows for greater confidence about making sort of long-term strategic plans around their investments, rather than episodically saying, okay, I'm going to make a short-term approach innovation and how we're deploying our CRA assets, and see how the examiners respond to that, and without even being able previously to think beyond that short time horizon. And this ability to act with to plan with greater confidence, I think is enormously significant, particularly as we as a nonprofit are really about working with banks and foundations and educational system leaders and others around impact. And that's going to really require that longer term horizon and more strategic thinking. Does that make sense?
Oh, yeah, well, that's exactly why we did this, is the reason you just mentioned, Bob. We, banks do need to have certainty, and, you know, in the past, there was a lot of subjectivity, and they might get one answer if they ask one examiner on one particular day, and then they would plow forward with the program, and then maybe they would hear down the road that from a different examiner, or when the exam came, that really didn't qualify. And having a very specific list of activities and adding to that list as we move along, and making that list publicly available on our website, and providing banks an avenue to get a written confirmation in advance of doing an activity, you know, are all things that get to your point, that allow for banks to have certainty in the longer view that, you know, that they will get CRA credit for what they're doing, and they may, going through our list and through our, you know, the new activities that get qualified, you know, they'll have a place to look to get ideas for programs that they hadn't thought of. I think that we'll get into that in our next session, Bob. So maybe this is a good transition for a break, and then we can take that up in our next session.
That sounds perfect, Barry. I want to thank you very, very much once again for kindly sharing your expertise and abiding commitment to equity and access. It's a privilege and a joy to work with you, and thank you for sharing these insights. We will indeed close this session now, and we'll stop the recording, and then we will get that recording out. Barry, we'll make sure you get the link to the recording, and we'll share this with all Summit registrants shortly after the session. And so we will take a break, and we'll reconvene at 10:15 using the agenda and the Zoom link that's for that final, the closing panel. Thank you very much.